Welcome back. We are in Bajaj Auto's new electric vehicle manufacturing unit in Akurdi. While speaking to CNBC-TV18 about recent fires, Rajiv Bajaj blamed the regulatory environment in India, which allowed several EV companies, startups to import low-quality electric vehicles into India and also called them junk. We also spoke to him about expanding the Chetak electric vehicle network in India, about the share buyback plan and the market outlook as well. Listen in.
You know, one of the criticisms we've attracted from shareholders, from analysts, etc., is that, look, you're a motorcycle company or let's say automotive company. You're not supposed to manage cash. And I think it's a fair criticism. You know, at different points of time, we've had between 15 and 20,000 crores on our books. And if you look at the last 5, 10, 15, 20 years, we have a hard time justifying why we need to carry so much money with ourselves. You know, I think beyond that, there is also a case for saying that you have to be a little starved or a little hungry, if not starved. You know, if you want to be sharp and move swiftly. And sometimes this sense or false sense of assurance or reassurance that comes with this cushion is not necessarily the best thing for the business, you know, to make an academic point. So we defined a couple of years back that we will have a specific policy in terms of enhancing return to our shareholders. And as a first step, we said that based on certain slabs that we defined, like $1 billion, $2 billion, anything in excess of that, which we don't see ourselves requiring in the foreseeable future, we would like to return to shareholders. We started doing that through the dividend route, and that's one way to do it, as everybody knows. But in the longer term, especially from the point of view of the corporate, and in terms of its ratios and the metrics and how perhaps the investor community looks at it, it perhaps makes more sense to do it as a buyback. You know, so we debated this over the last few months, and we've come to the conclusion that we maintain exactly the same policy, that over 15,000 crores, really we will return up to 90% of the annual profit to shareholders. But now we will do it perhaps not just purely as dividend, but as some mix of dividend and buyback. Tomorrow there may be a third way to do it. And this is exactly what the board will debate on Tuesday the 14th. And then you know, we will decide on the specifics of the buyback, such as the price or the amount, etc. But yes, this is the direction we wish to take forward.
Right. And any idea or figure that you'd like to give us in terms of the number of shares that you may want to?
Well, number of shares is hard for me to say. I can only say that typically the profit after tax of the company has been about 5,000 crores. If all goes well, as we spoke earlier, and we have a record Q2, and if that holds up in Q3, Q4, hopefully we do a little better than that this year. And if we are going to give out or give back up to 90%, and the word there is up to and not exactly 90, but if it's going to be up to 90%, then that's 5,000 crores that we need to return. Now, in which ratio shall we do it, dividend versus buyback, we have to define. Right. And that will define in turn, and based on the price, etc., that will define the number of shares eventually.
We have seen EV demand increasing. Now it's in the range of 33,000, 35,000 per month. Despite these fires, we've seen the likes of Okinawa, Ola, retailing around 9,000, 9,500 vehicles. Is it time for Bajaj Auto to ramp up now, ramp up as soon as possible? Do you think that inflection point has now come?
Well, I think each company has to do what is right for itself. These are three very different business models, I think, from whatever I know of Ola and Okinawa and of course of ourselves. What is right for us is to move forward in these steps that I spoke of, which is to move now from 2,500 to 5,000 vehicles, and then gradually find our way over the next couple of years to realize this capacity of 500,000 vehicles a year, and to do it all under the Chetak brand, which basically means scooters for now, which basically means relatively very high quality and relatively higher priced vehicles, and hopefully extremely reliable and durable vehicles, not just for India but for global markets as well. So right now we are going to focus on this niche because we believe that all volume starts from a niche. If you get the niche right, that's a great place to expand from.
Right.
And right now I am afraid that if we distract ourselves, which means our design engineers or our supply chain partners, by looking at cheaper, let's say higher volume products, this may not be the right thing for us, because then that's a red ocean with 200 people out there. So I think we are at the stage where we cannot begin to milk this cow. We have to keep feeding it. We have to keep investing in it, in this electric Chetak for some more time before we start putting scale ahead of excellence.
Domestic two-wheeler sales have been hit quite badly. There is a strain on the numbers overall, not just for Bajaj Auto, other players as well. Exports under stress. What would be your outlook now?
Well, everybody's been under stress, but I must say in the first quarter, we have probably done a little worse than everyone else because we were particularly let down by a couple of suppliers who are our suppliers, specific to us. So it's been a very, very difficult quarter for us, April, June. Our results will be out next month, and they are not going to be glorious. Having said that, we are very, very bullish on the second quarter. It seems like the supply chain is falling into place now. We had a meeting just yesterday of the entire senior management, and I can share with you that well, not the specifics, but that we are looking at a volume which may be a historic high for us in the second quarter. And should that happen, both domestic and exports, then we should be looking at a top line, a bottom line, which is really a record again. So hopefully we come out of this crisis stronger. But every day is a new day as far as supply chain is concerned.